in a financial emergency, should you withdraw money out of your FERS retirement or from your TSP account? So that's what I wanted to talk about today. Hi, my name's Christian with Plan Your Federal Retirement. We had a really good question came in from one of our subscribers from Benita. And this person said, would I be able to withdraw money from my FERS account for a financial emergency? So just getting right into it. They might be getting the FERS account conflated with the TSP, but just taking their question at face value, if we're just talking about the FERS retirement that you're putting money, automatically and a percentage of your income in, not the TSP, but just into FERS. And you're still working under FERS, you can't take money out of the FERS. You can't just take money out of that contribution. It's only after you've separated from service that you could consider making a withdrawal out of the funds that you've contributed into FERS. Doesn't mean that you should, though. And I probably would never recommend that, especially if you had years maybe long ago where you were paying into FERS and you're grandfathered into that retirement system. As a quick history lesson, in 2013, there was something called FERS Ray, revised annuitant employee that lasted a year that increased the contributions that you're paying into FERS to get the same benefit. And then in 2014, there's FERS Fray, further revised annuitant employee, which is the current FERS program that we're seeing today for new employees hired after 2014. So all that says is, hey, if you were hired before then, you're in the original FERS system, your contribution limits or contribution amount is less than those who are just now entering into the workforce. You're grandfathered into that program and that contribution limit. And especially if you ever have any intentions of going back into the federal government, probably doesn't make sense to make a withdrawal. It's probably not a significant amount of money based on the contribution and that work history. So it's always a good idea to just leave those funds in there. Maybe there's a case that you can make as to why that might not be the case. But my recommendation most of the time, just keep it in there in that FERS system. And then especially if you're vested, you've got at least 5 years of service, one day you'll get a pension, or you might decide later to go back into the federal government. Okay. So Benita might be asking about the TSP account and might have worded it incorrectly. So let's now answer that question. Should you or could you make a withdrawal of funds for a financial hardship out of your TSP? If you're still working or if you're not working, it doesn't matter. You can make a financial hardship withdrawal. You can go to the TSP website. You can read about what those requirements are for being able to get accepted for making a financial hardship withdrawal. But I'm not a big fan of making a hardship withdrawal as opposed to making, if needed, a TSP loan. The TSP loan, I'm a little bit more of a fan of if we needed money and we've exhausted all of the other resources and other options that we have. If we absolutely need money, then a TSP loan might be a little bit better of an option for the sole reason that you actually get to put money back into the TSP account and set up a repayment program. You're paying yourself back with interest. And I like that because it's not like you just get to take that money and not get to put it back. You get to put money in a little bit every month or however you set up your payment plan and put money back into the TSP. The TSP is a retirement account, shouldn't be touched until retirement. So if you have some sort of financial emergency where you needed to access additional funds, having a TSP loan is, somewhat like a slap on the wrist, if you will. And I don't wish any financial emergencies upon anybody, so don't misconstrue what I'm saying. But we should be accountable for years where we should have been more prudent with our cash flow, and we could have been building up that emergency fund so that if and when we ever experience any sort of financial emergency, that we have our own emergency fund set aside to help pay for that. And so if you have exhausted all those options, I would be more inclined to do a TSP loan as opposed to a TSP hardship withdrawal, again, because we can't put that money back in. So hopefully this is helpful, and best of luck as you're experiencing something like that. If you have more questions, feel free to write your question below in the comment section. Make sure you're subscribed to our channel so you get our latest videos and content that we put out. And of course, until next time, happy planning.